So how do politics affect your investment portfolio? Well, let's talk about that a little bit in the next Wealth and Whiskey video. Welcome to Wealth and Whiskey. I'm Roger Kiger. I've been a financial planner for about 30 years, helping people build wealth and protect their legacies. So Wealth and Whiskey is about full transparency on a lot of different topics, which is why we call it aged and unfiltered. So there's not much that we don't want to talk about. So today let's just talk about some politics. No, we're not going to talk about politics, but let's talk about how politics can affect your investment portfolio. Because I have a lot of people that come to me and say, hey, does the stock market do better when there's a Republican or a Democrat as president? Well, and there are so many studies that have been done about this. But the short story is that over the long term, it really doesn't matter. Now, there are some trends that show the stock market does better either in the first year or two of a presidential term or the latter part of a presidential term based on whether or not it's a Republican or a Democratic president. But by and large, it's hard to believe that there's just not much difference in the performance of the stock market historically when you look at the Republicans compared to the Democrats and how the stock market has performed during those tenures in office. So why is the market so volatile, right? Well, first there's a word that's called uncertainty, and the stock market hates uncertainty. So let's clarify a couple things. The stock market long term, it does what we call reverts to the mean. Long term, the stock market is valued based on the earnings of the company that make up the market. It's that simple. They're just based on earnings, right? Some of it's based on potential earnings, like some of the technology companies. They're based on what the market thinks they're going to earn, but it's either potential earnings or earnings are really what drives the value of a stock. So while the volatility, well, depending on who the president is and what they're trying to do, whether it's a Democrat or a Republican, they can start to implement things that affect different sectors of the market and can cause uncertainty or confusion or trying to get bigger companies to change how they do things to incorporate some of those policies that might be implemented by a different political administration. So let's use a couple examples. Tariffs are the ones we've heard about the most recently. How does that affect the market? Well, there's a lot of different ways to think about that. Maybe it makes products cost more. Maybe it makes more money for U.S. manufacturers as a profit margin. Maybe it affects everything negatively. Or maybe nobody knows for sure for some time period until everything reverts back to the mean and the stock market comes back to valuing its stocks based on the profit or the earnings from the companies that make up that stock market. So the tariffs is just one example of so many things that can affect it in the short term. So let's talk about oil. As everybody knows, the price of oil, based on the recent war that we've had here in 2026, the price of oil went up. So the market kind of thinks that's a really bad thing because the price of oil goes up, interest rates could go up, inflation could go up, everything costs more. It affects the profitability of airlines and all the transportation companies. The consumers can't have as much discretionary income because it just costs more to go on trips and do everything. So you can see how the price of oil can affect the economy, and long term, those economical effects could impact some of the stocks in that mix. So maybe it costs more to go on a flight, people don't fly as much. It costs more to go on vacation, people don't drive as much. It costs more to buy vehicles because the oil went up and interest rates went up, so now you can't finance a car as much, so it costs more. So there's a trickle-down impact. But most of the time, by the time that impact is felt, in theory, a lot of that volatility is gone, which is why it moves up and down so much. The market can change so much so quickly based on what they think is going to happen 1, 2, or 5 years down the road, and it may never happen. So it's short-term volatility in most cases until some of these things are actually converted into longer-term policy that does actually affect the economy. So it can matter. It could make a difference in the long-term value of some of these stocks, especially based on regulation. If you look at the financing sector or the banking sector, with a lot more regulatory rules in place, sometimes they just can't make as much money. And whether it's Republican or Democrat, can have a big impact on some of those types of sectors. But in reality, does it matter? It can. In the short term, it can definitely affect economic policy, which can definitely affect how some of those companies perform as a result of those short-term policies that are put into place, or short-term volatilities from some political event. And whether it's the national debts, whether it's the regulatory environment, whether it's inflation, all those things have an impact. But I would also argue that over the long term, in theory, the stock market should be valued based on the earnings of the company. And if you're invested in the stock market, you should do that only for long-term money, which is really 10 years or more. Otherwise, maybe you shouldn't be invested in the stock market. So if you look at this short-term volatility, does it really matter? Well, it does in the short term because it causes people to make irrational decisions and not do well in the stock market by putting money in or taking it out at the wrong time. But if you're staying invested for a long time period, over 10 years, historically and statistically, it hasn't mattered whether or not it's a Republican or a Democrat in office. The stock market, by and large, should revert to the mean or be valued based on the earnings of the underlying index. So, yes, it is important to watch what's going on from an investment perspective. It does have an impact on the volatility of the stock market, which can have an impact if investors are making irrational decisions and doing things that they shouldn't be doing in a long-term portfolio that should be bought and held for 10 years or more. If investors make rational decisions and do those things by staying invested over a longer time period, some of that volatility in the short term is just not going to matter. Now, there are exceptions. If somebody's close to retirement and looking to change their investment allocation, or somebody needs the money and needs to take some money out of the market, they probably shouldn't have been invested in the market to start with. So there are definitely exceptions. But the biggest impact, I think, from political volatility, or the impact from politics, is creating that uncertainty that makes investors make poor decisions. And that's what you really want to be careful and not do. Because if you stay invested, if you're invested in the right allocation for the right time period, and you stay invested through that cycle, statistically you'll end up doing better in your investment performance. So, do the politics matter? Yeah, they matter for headlines, they matter for short-term needs. But think about your investment portfolio as a long-term strategy and stay invested throughout those cycles, and you'll actually do a whole lot better. So I hope that helps a little bit, because watching the headlines every day doesn't really help your investment portfolio or your sanity, right? So maybe that's provided a little clarity, but remember to stay invested long term and you'll be just fine. And if we can help you in your financial journey, by all means, please download the Legacy Blueprint in the link below. And please like and subscribe to our channel. We don't want you to miss any of the episodes. So hopefully you'll see us here again next time. I'm Roger Kiger. I very much appreciate your time, and we'll see you soon. Cheers.